Have you ever felt that a good time would last forever? That the music would never stop playing and the party would never end? In the 1920s, an entire generation of Americans felt that way. They called it the Roaring Twenties. It was a time of great change, of new technology, and for many, a time of new money. People believed they had found a magic recipe for wealth. It wasn't in a factory or on a farm. It was on a street in New York City, Wall Street, a place where, it seemed, anyone could become rich. A shoeshine boy could give you a stock tip that would make you a small fortune by lunchtime. It felt like a dream. But dreams, as we know, have a way of ending. And this one ended in a nightmare. To understand the crash, you have to understand the hope that came before it. After the First World War, America was booming. New inventions like the automobile and the radio were changing daily life. And the stock market, once a place for the very wealthy, suddenly seemed open to everyone. It was seen as a sure bet. Prices only went up. Imagine your neighbor, a regular person just like you, buying a few shares in a company. A week later, those shares are worth double, then triple. You see them buying a new car, new clothes. You start to think, why not me? That feeling spread across the country like a wildfire. People took their life savings, they took out loans, they put everything they had into the market. And there was a trick that made it even easier to get in on the action. It was called buying on margin. It was like a loan from your stockbroker. You only had to put down a small amount of the stock's price, maybe 10%. The broker loaned you the rest. As long as the stock price went up, it was a brilliant system. You could control a huge amount of stock for very little money. But if the price went down, well, that was a risk few people wanted to think about. By 1929, billions of dollars in these loans were propping up the market. It was like a giant tower built on a foundation of borrowed money. And the higher it got, the more people admired it, never thinking about how unstable it was becoming. Economists warned that it couldn't last. But their voices were drowned out by the roar of the 20s and the constant clicking of the stock ticker, each tick promising more wealth. In the late summer of 1929, the feeling began to change. It was hard to put a finger on. The market would dip for a day, then recover. But the wild, confident energy started to fade. A few big investors quietly began selling their stocks, taking their profits while they could. It was like the first few drops of rain before a storm. No one panics at first. You just notice the sky getting a little darker. The first real thunderclap came on Thursday, October 24th. The market opened and a wave of selling began. The ticker tape, the machine that printed out the stock prices, couldn't keep up. It fell hours behind, and no one knew what their stocks were actually worth. All they knew was that the prices were falling fast. Panic started to set in. Crowds gathered outside the New York Stock Exchange, their faces filled with worry. That afternoon, a group of powerful bankers stepped in. They pooled their money and started buying huge blocks of stock to try and stop the bleeding. It was a show of confidence. And for a moment, it seemed to work. The market recovered a bit. People breathed a sigh of relief. The newspapers on Friday said the worst was over. The party, it seemed, wasn't over just yet. They were wrong. The weekend offered no comfort. All across the country, families sat around their dinner tables, nervously reading the papers, wondering what to do. The trust was gone. On Monday, the selling started again, and this time, the bankers didn't step in. Then came Tuesday, October 29, 1929, a day that would be forever known as Black Tuesday. From the moment the opening bell rang, it was chaos. There were no buyers, only sellers. Everyone was trying to get out at the same time. The floor of the stock exchange was a sea of screaming men in suits, waving their hands, desperate to sell at any price. 16 million shares were sold that day, a record that wouldn't be broken for almost 40 years. Think about what that meant. In a matter of hours, companies that had been symbols of American strength were worth a fraction of what they had been. Fortunes built over lifetimes vanished. The ticker tape machine finally stopped clicking late that night, long after the market had closed. It printed a story of total collapse. The dream was officially over. The silence that followed was deafening. The panic on Wall Street quickly spread to Main Street. People who had lost everything in the market rushed to the banks to withdraw their savings. But the banks had also invested in the stock market, and they had made loans to people who now couldn't pay them back. When people arrived at their bank, they saw a line down the block. And then they saw a sign on the door, "Closed." The bank had run out of money. Their life savings, the money they had worked for, was gone. Not just lost in stocks, but gone from the one place they thought was safe. This was a new level of fear. Stories began to circulate of powerful men who had been millionaires in the morning and were penniless by evening. Of ordinary people who had lost everything they had saved for their children's future, for their retirement. The confidence that had fueled the Roaring Twenties evaporated overnight, replaced by a deep and painful sense of betrayal and loss. The crash wasn't a single event. It was the trigger. It was the start of a long, slow decline that became the Great Depression. With no money and no confidence, people stopped spending. Businesses, seeing no customers, had to lay off workers. Those workers then had even less money to spend. It was a vicious cycle that pulled the entire country and much of the world down with it. The images we remember from that time, the long lines for bread, the shantytowns called Hoovervilles, the desperate faces of families searching for work, all have their roots in the panic of October 1929. It was a harsh lesson in how connected we all are and how quickly a financial crisis can become a human one. So what did we learn from it all? We learned that markets can be driven by emotion just as much as by numbers, by greed and by fear. New rules were put in place to try and prevent a crash like that from ever happening again. Things like insuring the money people put in banks, rules about borrowing money to buy stocks. But the memory of 1929 is more than just a history lesson about money. It's a human story. It's about what happens when we convince ourselves that something is too good to be true and we believe it anyway. It's a reminder that beneath all the numbers and the charts, the economy is about people. Their hopes, their dreams, and their fears. The Roaring Twenties ended almost a century ago, but the story of the crash stays with us. It's a quiet warning that echoes through time, reminding us to be careful, to be humble, and to never forget how quickly the party can end.